Oh boy. Okay, so APLD just sold off about 13% today. What a drop for the company and on pretty massive volume. And we're going to answer the question, what's going on with APLD stock? The data center market hit super hard today, and we saw a lot of the companies see a big sell-off. Not just starting this morning, but towards the end of the day, we saw a lot of sell-offs even after hours. And so, how are things going? How are you guys doing? What is the afternoon looking like? APLD. When I'm looking at where they're going right now, and we just kind of pull it up again, massive volume. Most people have no idea why they sold down, but this definitely wasn't any sort of like collapse. Let me show you what actually happened. So there was an SEC filing. What it actually means, I want to show you it, and then also what's going on next here for APLD. One thing that we were watching is that they sold down, but again, they didn't break pattern below their overall uptrend. So still not even an alarm on my side. But as a long-term investor in the company, it doesn't feel good seeing the portfolio down today. We're down about 3 to 5% on average, and then we see the whole APLD stock have a rough day. The ticker sold down 17%. So today, it was trading as low as these 22.90, touching nearly 28 at one point, with over 38 million shares traded today. So a lot of volume. And you see a lot of panic headlines for sure. But here's the truth. This isn't just some surprise earnings miss. Okay. It's not that there was a failed lease or one of their billions of dollars in contracts went away, or that there was a thesis breaking on the stock. It was primarily about just sentiment in the market and resetting some of the expectations in the AI market. And you can see that with a lot of companies, as they weren't the only company that sold down. So it was almost, there was no single catastrophic piece of news that made APLD sell down today. What we saw was more of a momentum unwind across most high beta AI infrastructure stocks. You see, IREN sold down 13%. The AI data center market, while they have massive megawatt headlines in this stock, has ran super hard earlier this year from $3 a share to $40 a share. It just sold down to this $22 range. And will it keep drifting lower? Are they going to snap back instantly? There's definitely some profit taking towards the end of the year and rotations that always happen. Can you reduce some of that risk? Yeah, we just talked about it yesterday in the video. Like, while you're investing in these companies, a lot of the smart money also has some diversification into other markets. But this is the part that matters with the data center market. The options market has been screaming volatility. There's been thousands of option contracts, especially in the data center market, with implied volatility, expecting volatility of north of 110%. So what that tells us is that there's traders that were pricing in some huge swings here, even though the demand has been growing in the market for data centers. And so the volatility just accelerated selling, and without any bad news, we see the stock sell off today. And it's really just a mechanism of the market that we see quite often, where it's like not one event fueled it, but you see the sell-offs kick in. So BITF down 9%, Wolf stock, NBIS down 8%. You might have seen the headlines for APLD recently. I don't know if you guys saw 2.4 million shares tied to an SEC filing, but it's kind of interesting. It came from a forum. I think it was like S3. I was seeing it over in the Prophecy app earlier in December here. And it's kind of like them not, it was kind of like an indirect way for them to slightly dilute. It means that they were selling. They weren't receiving the proceeds from the shares. So it's not a new capital raise. However, it does kind of introduce potential dilution and float overhang, which basically means momentum in this stock could see some dampening. And so while the details here are what we're looking at, you got Nvidia is still investing in the company. They've got billions of dollars in contracts that continue to hold. So despite the 17% sell down today, if you zoom out, you kind of look, and we were anticipating some of the sell downs in the near term. But this is a company that's positioned at the intersection of the AI compute demand that we're seeing surge, power constrained data centers, and long-term contracted infrastructure revenue. So if you just consider that they've pivoted away from the like crypto hosting and now they're into the AI driven market, and then as a result they've gotten new leases, billions of dollars. The leases are real. We're talking about multi-billion-dollar 15-year agreements, including some with CoreWeave and others. So I wouldn't say that we're looking at what would be, a huge sell down, but you do see some projections from Prophecy app here anticipating more of a sell-off, potentially down into this $22 range, which we've seen those near-term red projections, but looking bullish. And most targets, if you look at, let's say, Grok or OpenAI or Claude or Gemini, any of these stocks that are projecting the future for APLD, a lot of them are in the $40 plus. I was just reading an article recently here that a lot of the targets for APLD from top institutions, not that we always consider the targets, were in the $40 range plus. Okay, $40 range plus. Just given their contracts. We didn't see anything negative happen with their revenue while it was still tied, and we're waiting for a lot of their contracts to convert into more revenue. Their balance sheet is still up to $2.4 billion and increasing. So that's how things look in the near term. Now, what people don't realize about the data center market is that it's still in this infancy with a lot of these companies, and the volatility is tremendous, as it always is. And that's what's made up some of these huge gains. But that's also what shakes out some of the initial, traders that are just looking for the 1 day, 2 day profits, the couple days or weeks, versus those investors that are looking in the AI compute over the next year, 5 years. And those investors are most likely buying on these types of dips. But it's still extremely discouraging if you're in a position that you haven't maybe managed to stop and you don't want to see it sell down, because you're looking to sell it for profit in the short term. But again, those games require more risk management. They require more discipline than the game of patience and waiting and investing in the company for where they're going to be, 5 years from now. I don't imagine that, Nvidia was too worried about the fact that they sold down today as an investor in the company. They probably weren't really worried about that. They're probably not really concerned. BlackRock might not be that concerned because they might buy more in anticipation that the data center market's going to continue to grow. So, it's always going to be this kind of like risk when you see the market sell down, for sure. But you have to kind of consider the fact that most of these data center companies aren't actually even converting the new deals that they've signed this year into profits yet, because there hasn't been enough time for the deals to hit their balance sheet. So for example, like if you look at the new billions of dollars that have been signed with, for example, CoreWeave from APLD, it's been such a short amount of time that those deals haven't even hit the revenue income statements of APLD yet. And so there's definitely some, lagging measures there where people are like, okay, is this going to continue? But once again, it's got to be kind of looking at the volatility that was expected. You see robotics markets have a rough day. AI defense definitely seeing some sell downs as well, and it's quite expected. And what I'm looking at here, Elvis says, red wire, you can thank Kramer. Again, I don't think it's solely one indicator here by any means. It just doesn't look that way. It doesn't seem that way. When it comes to APLD calls, that's going to be, again, there was about 52% more puts than calls on the short term. And so that's why we see them sell down. Brutal day for that 17% sell down. And honestly, when you're looking at the markets, again, my portfolio is down, and I don't like to see that, of course. But when you're looking at the APLD conversation, it wasn't just APLD. It was general data center market. You got BITF, Wolfstock, IREN, Inbis, CoreWeave sold down 8%. They're at a much larger market cap. And TSSI was down 6%. Broadcom, one of the top companies in the world, was down 6%. You know, this is not a single article from APLD. And here's what we got though. When you're looking at the overall trend that they got going, okay, and we just take a step back into this recent pullback, you can see they've really held above this level since $3 a share with a very consistent uptrend. You can see them holding APLD from April all the way through to July in their trend, holding into September. And then of course they surged up to $40. We saw that. But the reality is that the momentum slowed. The hard facts become more of a focus for investors. And that's what we've really been talking about as the main reason why APLD would see extended sell-off, is because they have signed billions of dollars in deals, but there's still no conversion of that into their balance sheet that shows up on their financials yet, because they haven't reported the earnings since signing those deals and seeing the money hit their bank account. And so that's the same thing we saw with Big Bear AI, for example. You know, that was a company when they were starting to grow and expand. We hadn't seen them come in with the new money they had raised or increase their balance sheet, but we said it's probably going to hit the balance sheet. It took a quarter. The first quarter didn't show up. They sold down massively because it hadn't showed up in their financials earnings yet. And then after that, and this is, you know, to talk about earnings, of course, this pull down has nothing to do with that. This is primarily for just greater market momentum sell down, right? But when it comes to like Big Bear AI, for example, that stock, it took a quarter. The stock tanked because they still hadn't seen the revenue show up or the balance sheet get better. And then this last quarter, their balance sheet surged tremendously. Now they're up like 700 or 800%, and now the stock can stabilize a little bit better. The same thing is true with APLD. You're probably going to see more stabilization hit the market once, of course, the revenues for the billions of dollars in data center deals they've been working on is going to actually hit their balance sheet. That's really just it. And then maybe that will help and kind of smooth over when you see the panic sells hit in the broader market, you know, like what we see today. And what's going on, David? You got Kevin and Gordon. Hey, what's going on? More adding opportunities, says Chetta. Chetta's been here watching us since we saw some dips back here. I remember we were watching them from $3 a share. They surged to like 17 and sold all the way down to under $9 a share. People were freaking out and we're like, it's an adding opportunity. It sucks, but hey, this is when we get excited. And we see them then jump past that up to $40. Same thing here. They sold down to 19 from 40 and then recovered back to $36. So it's a volatile play. You know, it's always going to have that volatility. JK says, why is every single stock you have as an option in the red? I mean, are you looking at your portfolio and not all of your stocks are in the red? I mean, look, I'm looking at a lot of stocks here. There are some that were in the green today, but let's see. TSLL was in the green. Oh wait, that's the inverse, or no, that's the 2x of Tesla. Tesla did good. NVDL was up. Oh, that's the inverse of Nvidia. I mean, yeah, SPY was down today. So I mean, it's part of the game. You see it in, that's the key here, is to realize that the revenue that came out in the last quarters wasn't enough to put them into that, A tier of data center companies. So we see them sell down today. If they had more revenue showing up from the billions of dollars in leases that they recently signed, then they probably do much better in a condition where you see a correction in the market. But more attention goes on to that lack of financial conversion from the deals they've signed to the actual earnings yet, that they get hit a little bit harder when the market pulls back. So that's kind of what's going on here. Luis, what's going on? You got quantum stocks. Yeah, quantum stocks definitely saw some pullbacks. And with APLD, again, yeah, Oli says bad day for sure. We see it here. RKLB had volatility as well. What am I doing in this situation is I'm going to be generating some more watch lists on some of the stocks that we've seen pull back recently, and I'm going to be looking to add for long-term positions, but you don't want to add aggressively when you see pullbacks for short-term trades. You can, in fact, that's when a lot of the money gets made, when you see that kind of big sell down in the V-shaped pattern that we see time and time again in this market. And another thing that maybe it shows up negatively, that the U.S. Chip companies have more of a payouts to the U.S. government as a result of the China deal, that now they are distributing their chips to China again, which is seeing a huge demand for example, NVIDIA and AMD and what have you. But that will also increase their revenue, so they'll probably have some really positive effects on that in the next few earnings. So that's going to be carrying the market more. What's next for RGTI? I see a lot of the quantum market have the short-term volatility continue, and I would expect that they're going to continue to sell off, because frankly, if you look at the quantum market and you look at the short term, the 5-year price targets were hit in a matter of months. When we initially started investing in Rigetti, we were looking at a $20 to $30 or $50 price point as where we would like to see the stock 3 to 5 years away. Again, we started investing in these companies around $1 a share. And so it wasn't, yes, did we freak out and when it was up here from $21 a share and sold back down to $4 in that crash, did we get burned? Yeah, we did. We didn't anticipate that sell down. In fact, we were thinking, hey, it's got so much potential here, it would make sense that it surges further up above $20. So no, we didn't see that Jensen of NVIDIA was going to say that quantum is actually 15, 30 years away or whatever he said that crashed the market there. But there was instances right after that when we saw, okay, the market crashed. Well, that's an overreaction. And then we did continue to buy back in. And then we didn't really buy back in too much after it kind of got back up into these levels of this $20 range, close to. But then that's when it surged up to $58. When we got up to around $50 a share, we knew we were 2-3x more than we should be at, and so, or 5x more. And so at that point, that's when we started doing some shorts. Now, did I anticipate the shorts here on this pullback we saw today? No, I did not. In fact, the nearest support here is around $20 a share with Rigetti, which I've been shorting Rigetti because I have long-term positions we've held, and I didn't want to see us lose those gains, and I opened up a lot of those shorts here when Rigetti was at around $45 a share. So once that pulled down, I knew, okay, it's definitely breaking pattern here. So this is very normal. It is how do you tell? Because you look at their revenue. The revenue is so small. This really comes down to the balance sheet, right? The revenue is so small compared to the market cap that the sustainability of the prices that they're at just doesn't make any material sense. Could it happen? Could it hold longer? Yes. Probability would lead us to believe that they're going to sell down more. And so that's kind of why we've held out. Can you give us a small tutorial on how to do the shorts on Robinhood? Louis says, yeah, of course. Definitely we can make that happen. Do you think the AI sector continues to pull back? Yeah, I mean, today, this wasn't just the AI sector. I believe it was every market. If we look at the space tech market, you can see it sell down today, big time. So this is more of a general market thing than it is any one individual market. And do I think that it's going to continue to pull back? I think that what matters here is not whether or not it's going to continue to pull back, as much as whether or not you have a plan for if it continues to pull back, or if it continues to rally from here. And I think at this moment, I'm anticipating that our portfolio, a lot of our longer term positions, we continue to hold. And when the pullbacks hit, we oftentimes add to our positions. And then when we see opportunities, let's say momentum shifts, we see more red tomorrow morning, and then we start to see a recovery, then we're definitely going to be there tomorrow morning at market open, and we're going to be watching to see if any opportunities present themselves so we can potentially trade short term. But again, we're still kind of monitoring as we're in one short-term trade over in the data center market that we did see pull back. TSSI didn't drop 17% or 35% like APLX, but did drop about 5%. So we're going to be watching them tomorrow morning as well. Jason says Jim Cramer is talking this one. Yeah, I mean, it could be Jim Cramer. I don't think that it's really going to be, but I don't think it's going to be solely Jim Cramer. Maybe. I don't think so. But what's going on, Johnny? How are you doing today? And Kevin. Yeah, I really appreciate the great insights. We had some great insights inside of Stockmates. Today was a really crazy day business-wise. So I didn't actually get to show up. We're just adding, we need to add an attendance thing. I know I'm above 95% for the daily live trading sessions, but this morning we were not there. I know. What happened? What happened? Yeah, we had a lot of things we're kind of sorting out with the Prophecy app, getting the, especially in a day when you see pullbacks hit, there are these downtrends that are anticipated by the Prophecy app with the AI that we use. But again, it's just dialing in some of those things were essential for today. And so we're really watching there. We do see maybe potential recoveries here into the next week after APLD has pulled back. Nope, even the next week, still holding a little bit red, but into the next month looking green. And that's how it's been on Prophecy app. I don't know that we're going to see a full recovery or anything like that tomorrow, but we might see some bullish recovery there. Cheddar says, still able to get lifetime access? Yes, currently you can still get lifetime access, and it is very much, it has to be adjusted because the lifetime access is amazing. It's an amazing offer. In fact, it's going away very soon, and if you haven't got lifetime access to our daily live trading sessions, getting into Stockmates and getting access to the targets for the week and things like that, by all means, right now is the best time with the lifetime access because we are converting to a subscription. Now we were looking to integrate the subscription into the Prophecy app, so we may be going that route. But again, if you want to get lifetime access, which is really the best deal, it's not getting better than this. Second link below if you'd like to tune on in and market open tomorrow morning. We'll be there for sure. Yes, that's still there. For now. And when it comes down to the opportunities, again, I just want to let you guys know, while the market has this pendulum-like effect that can pry into you, hook into you, and almost throw off your entire aura, you are not your money. When you see pullbacks, oftentimes they are opportunities in disguise. Just want to leave you guys with that. Appreciate you all. I hope you have a great rest of your day. Thanks so much for tuning in, and I'll see you guys in the next live session. Take care.